Welcome to Nasdaq Trade Talks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, a regulatory landscape, and capital markets. This segment is presented by Charles Schwab. I'm your host, Jill Malandrino, and joining us this afternoon, we have Mark Marex, Head of Index Research Americas at Nasdaq, as well as Brian Giere, Senior Vice President at Amplify ETFs. We're here to discuss thematic investing and distinguishing a long-term secular trend from a fad. It is great to have the both of you with us. Welcome to Trade Talks, Brian. We'll kick it off with you. Before we get into the conversation, let's establish what exactly is a theme. What qualifies if you want to call something a thematic ETF?
Yeah, no, it's the important distinguisher of from a fad or a short-term trend. We really define it a theme, being an established theme, seeing spending coming from three primary drivers. That's government, corporations, and consumers. When that happens, when that spending aligns, a theme really becomes established and a long-term, more secular trend.
Yeah. And Mark, a number of the themes that we're going to discuss today, of course, are Nasdaq 100 constituents. And one of the things that you and I are consistently discussing is, speaking of spend, CapEx, what goes into these companies and why they are the growth leaders.
Yeah, that's right, Jill. I mean, there's to Brian's point, there's sort of overarching definitions about a theme that I think are certainly applicable and valid to all the ones we're going to talk about today. You mentioned the Nasdaq 100, which we sometimes talk about as a super thematic, right? Because it covers companies operating in so many different areas of disruptive tech all at the same time. But really excited, today to talk about some of those kind of narrower areas where, focus matters and specialization certainly matters in some of these narrower thematics where if you're a company or you're an indexer and you're trying to build a benchmark that accurately gives investors access to something that's a bit narrower, there are definitely some tricks and challenges to that, but we think we do a pretty good job of that here at Nasdaq.
And Brian, let's talk about that. Amplify ETFs. You have 14 thematic ETFs. Let's discuss three today where you've partnered with Nasdaq Global Indexes. Tell us about these. Let's start off with Hack.
Yeah, so Hack is the Amplify Cybersecurity ETF. It's the first cybersecurity ETF to launch back in 2014. As Mark alluded to, the emphasis and the differentiator for this ETF is the purity of it. It's pure, but it's diversified. It has a revenue test where companies need to derive at least 90% of their revenue from cybersecurity activities, or have a strong revenue score in order to qualify for the ETF itself. So it's been a great play in the technology space. As Mark said, it's a way to play cybersecurity specifically. And I think, just looking at, an evergreen long-term trend or theme, there's really no greater one than cybersecurity. It's affecting everything that we do and are involved with. And like I said, from a consumer and corporate and government standpoint. So this ETF comprised of 23 securities. So it is a great pure play, but also diversified. Also low overlap to the broad indexes. So low overlap to the Nasdaq 100, to the S&P 500. So when investors, and this is another key point with thematic investing, I think a lot of investors think they're getting exposure to these themes just by investing in the broad indexes, but that's not necessarily the case. It's ETFs like this that can provide that more direct and expressed interest in this theme.
Yeah. And Mark, again, a theme that you and I commonly discuss as these emerging technologies continue to be adapted, right? The attack surfaces only increase more. So cybersecurity isn't necessarily something that you have to have. It's not, the sexy part of the business, but it's competitive advantage these days. If you want to be able to do business in the marketplace, you have to have a rock solid cyber response and mitigation plan.
Yeah, Jill, that's right, and that's why we've been writing and talking about cybersecurity for I've lost track of how many years now at Nasdaq, but we have multiple indexes in house that each have sort of a unique design in terms of generating that targeted exposure. Brian talked about how this one is fairly unique because it really does try to focus on the pure play names. It starts with our broadest benchmark of cybersecurity companies globally that includes, really dozens of companies. It's over 50 in total a lot of lesser known kind of international names, a lot of smaller cap names. Here we've got a pretty high minimum market cap threshold of $1 billion, as well as those revenue tests that Brian talked about. So when you're talking about 90% revenue exposure, that does weed out a lot of the names that are not pure play cybersecurity industry leaders. But there's this interesting condition in the methodology that does allow a few really large companies that, just by virtue of how much dollars they're earning from cybersecurity year to year, if they meet a certain material threshold of the total industry's revenue contribution from cyber, like in the example of Cisco and Broadcom, then yes, they can qualify for index inclusion. So Brian's absolutely right. Minimal exposure and overlap here for something like the S&P or even the Nasdaq 100, because you just don't see the Mag 7 names in here. They might be doing something in cyber, but they're so big and so diversified that it's just not a meaningful part of their business. You do get a couple of those heavy hitters like Cisco and Broadcom that, they do a few things, they do them really well, and that includes today cybersecurity.
Yeah. And Brian, let's discuss iPay certainly having its moment in the sun as we increasingly evolve into a cashless society, particularly here in the US, where we're starting to see this framework come around many of these names that have exposure to it.
Yeah, talk about evolution. I think in the world of payments and the way that we pay for goods and transfer goods and assets, what a quickly evolving area. So this is the Amplify Digital Payments ETF. It was actually launched just over 10 years ago. So another ETF with a good track record. It's actually the only ETF that's dedicated specifically to the digital payment theme. I think it's a great complement and forward-leading allocation to the future of payments and financial services. So that's another key point, just stepping back on thematic investing, is how investors and FAs are using them. And I think as a complement, when you look at your sector or industry allocation, how can you provide that alpha or that edge in your portfolio? And this is one I think provides a great complement in the fintech or financial services space. Again, another ETF and in our partnership with Nasdaq indexes of low overlap. So again, not huge exposure when you're investing in the broad indexes. But Jill, to your point about just what has happened this summer. It's the summer of crypto, but it's also just all the legislation and the regulation. The Genius Act, I think, is one of the keys in incorporating stable coins and that technology into digital payments. So it seems like, you think about 10 years ago when this ETF was first launched, it was a fairly nascent, space where people were buying goods, on their computers, and then it transferred to or transitioned to mobile, and then mobile now it's digital payments. So it's all over the place and being used in everyday life. So it'll be very interesting just to see, and I think this ETF is positioned extremely well for this next evolution. And again, blockchain, AI, stable coins, it's positioned very well.
Mark, it's interesting. You could even argue with this, with iPay having launched 10 years ago, essentially a first mover, because a lot of the technologies that we're leveraging in the apps that we use today, it's almost ubiquitous. So the technologies that we're talking about now in another 5 to 10 years, if we're having this conversation, it's going to be, a ubiquitous application that we're doing. So I think for this to launch 10 years ago says something.
Yeah. And look, I think that's something that does distinguish our broader suite of thematic indexes at Nasdaq from a lot of our competitors and a lot of the up and comers who've entered into this space in recent years. Is we got started pretty early on a lot of this stuff. And this one in particular, digital payments, I just want to comment, in contrast to cyber, right, where we actually have done that work in-house at Nasdaq for 10 years, screening companies and trying to understand what's their exposure to the theme, to cybersecurity, and giving them those revenue scores internally. This is an example of a really successful partnership that we've had with CTA, Consumer Technology Association, which runs CES. That's what they're best known for every January in Las Vegas, biggest conference of any kind on the planet, getting together, the biggest innovators, the broadest group of tech enthusiasts on the planet. They also have a fantastic research shop, and they've launched around 20 indexes with us over the past 15 years to target some of these thematic areas. And what they bring to the table, frankly, is again, this sort of differentiated exposure that is part qualitative and part quantitative, where they try to really understand a space, a thematic space like digital payments. They break it down into the categories. They try to make sure that investors that track this benchmark get the exposure to something like card networks, right? So you'll see some of the big names like Visa and MasterCard in here, as well as infrastructure and software providers, processors of payments, payment solutions. And so what you end up getting is, a pretty nice diversified index where you've got some of the established heavy hitters that are making big moves with respect to digital payments. And then you've also got the up and comers like PayPal. You've got Coinbase in here. You've got Block in here. You've got the buy now, pay later companies like Affirm. So it's a really, really interesting mix of companies. And as Brian said, fairly unique in the market, because what you tend to see more often is sort of broader fintech thematics or narrower thematics around maybe just crypto and blockchain exposed only. Here you get, not the entire fintech space, just the payments segment of that, including some of those crypto names and including some of those really innovative financing platforms like the buy now, pay later folks.
Brian, let's wrap up here with our third theme, and this gets you exposure to the energy transition to power these emerging technologies.
Yes, yeah, this is a unique play, but I think, like you said, an undercurrent of the energy and AI play too. So it's the Amplify Junior Silver Miners ETF, ticker SILJ, SILJ. This one was launched, another long-term one, 2012 is when it was launched. And it's the first and still only ETF that targets small and mid-cap silver miners and silver miner companies. It's actually, as an aside, it's our top performer this year across our product line, just with how silver has performed. But the mining aspect of that is very interesting. It's actually the 11th best performing ETF across over 4,000 US ETFs. That's excluding leverage and inverse ETFs, but just saw that stat this morning as well, just to kind of shine a light. And there's other, obviously, precious metals ETFs up there, but SILJ is definitely up there as well. I think too, just drilling down into the use cases and how FAs and investors are using this. I think one, of course, it's precious metals exposure. We look at the gold silver ratio, where gold price relative to silver. Still, even after this run of both metals and silver in particular, is still an attractive time for silver itself. But it's also, we see it as a unique investment, just like you said, in the increased energy demand with the growth of AI, just the conductivity of the metal itself for solar panels, for electronics. So it's not just a store of value or a safe haven like gold. It actually has that great industrial use. So it has a very unique spot in investors' portfolios, and we've seen a lot of interest this year. It's one of our top for inflows, and obviously the performance is there. So yeah, a fun one to talk about this year.
It is. And Mark, that's something that we also discuss frequently, is getting exposure to the derivative plays from the emerging technology theme.
Yeah, Jill. I mean, your segue was spot on, right? What this all relates back to is this really broad, really powerful, and accelerating and exponential wave of disruptive technological forces that we're in the middle of, right? The energy transition really not showing any signs of slowing down, regardless of kind of what you hear in the day-to-day news and the media. Solar continues to expand at an exponential pace, and it comes down to economics, right? It's simply cheaper to generate energy from solar in most parts of the world these days, especially the US, than it is from fossil fuels. And the solar industry today already accounts for 10% of annual global silver consumption. That's because silver is the most efficient option to conduct electrical current in those photovoltaic cells that make up solar panels, right? And so whether you're talking about energy transition, renewables, and solar in particular, I think it's a very exciting story when it comes to silver. When you're talking about the broader story around, data center and mobile devices and any number of physical products in tech, did you know that silver is second only to oil among the entire span of commodities that are out there in terms of its industrial applications. It's got over 10,000 unique applications in total, right? And so, gold often steals the spotlight. That's the one that people pay attention to in terms of an inflation hedge and a store of value and a safety play and all these things. And that has led to gold getting really extended, which Brian was talking about. That ratio, gold to silver, is within like the 98th percentile of the most out of whack that it's been since like the 60s in terms of gold's relative expensiveness to compare to silver. I think it's silver's moment to shine in the coming years. People are going to start to rediscover just how important this metal has always been and how important it's going to be as some of these technological waves, continue to evolve and accelerate.
I did not know it had that many applications, so learned something new on Trade Talks today. Appreciate your insights as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.
Thank you.